Welcome back, ladies and gentlemen. I'm going to give you a short footprint exercise to do now. However, same as with the depth of market exercise, please don't spend more than 30 to 60 minutes, absolute maximum, doing this. Now that you've established a solid base in order flow, I have much more important things for you to do, things that are going to take your performance to levels you can only dream of. I'll discuss that, and as with everything I've shown you, no need to take my word for it. I will back that statement up in the final video of the 2-day accelerator, which is coming up. However, before watching that, please just spend 30 to 60 minutes doing a short footprint exercise I'm going to set you in this video. I'm going to lay everything out for you. I will show you exactly what I want you to do. So let's do it. So first step, open up your footprint chart book. Let's start with the GBP USD chart book. I also want you to print out the PDF in the download section called Footprint Homework Exercise. Very simple exercise. I just want you to find 4 to 5 examples of what I'm about to show you. Maybe 2 or 3 here on GBP USD and 2 or 3 on a second market of your choice. Now, futures markets run from 1800 New York until 1700 New York, so 23 hours a day. And that is what these dotted lines here are. They just signify each day. So if you go into your gray console, click on chart, then chart settings, then session times, your session start and end time should be 1800 and 1700. If not, just do that now, but it should already be like this. Now remember, I already had you set your platform to the New York time zone in the installation video. So that was within global settings, time zone settings, should be New York. If not, set it to New York and click OK, although you should have done this already earlier. This is something you probably wouldn't realize as a retail trader. Banks and institutions that trade these markets will have these time zone and start and end settings. Very simple, but if you don't know, you don't know. Now you do. Now you shouldn't have to make any changes to any settings, but let me just show you what I've done just for reference. Now I've set these bars as 60-minute bars just so you can see plenty of days. You can click on chart settings, then if you click on bar period, you can change that, although I recommend just for this exercise, make sure it is set to 60. And finally, if you go to data limiting, I've set this to 30 days, which means you can scroll back 30 days, but you're welcome to change that. I will suggest leave it as 30. Same for the footprint chart. Can you see under chart settings, if you click on data limiting, you'll see I've set that to 30 as well. It just allows you to scroll back 30 days. So just make sure both of these for both charts are set to 30. The reason what I have just pointed out there is important is because as part of this task, I want you to go and scan through the chart on the left, the plain candlestick chart, and I want you to identify areas where we have had shifts in behavior, or what you could also call market turns. A little tip to do this, you may want to just stretch your chart a little bit by holding control and stretching the y-axis. Now, finding these changes in behavior or turns is actually very simple. They're everywhere and they happen every single day. So for example, we have a clear shift or market turn here. Would you agree? Now the trick here is it doesn't actually have to be this extreme. As I said, we get market turns every single day without fail. Let me just circle or highlight some to you. Again, remember, stretch your chart out like this using control and the left mouse button if you want. It might make them easier to spot. Do you see? They don't have to be extreme. They can even be quite subtle, but these areas are giving you by far the highest probability of success in your trading because it is where we have complete changes in buyer or seller behavior. So you can enter with a small stop loss, but potentially achieve large returns. You'll see that in a moment, so no need to take my word for it. Just think about the hardest part of trading. It is knowing where the turn is coming. If you know where the turn is coming, you can literally print money like a cash machine. The problem is with a plain candlestick chart, you're just simply guessing. So let's move you away from guessing. Now, just to repeat, the market turns don't have to be major reversals like this. They can also be small pullbacks or retracements going into some continuation behavior. In fact, that is pretty much the type I focus on. So let's concentrate on those for now. As I said, I found the more subtle they are, the better. My point is, they're everywhere. The market is constantly pulling back, retracing, and then continuing, or is full on reversing. What the footprint will help you do is to highlight the best retracements, or if you prefer, full on reversals to take. You'll see this for yourself. It's going to blow your mind. Just give it a go. So what I want you to do is just go one step at a time. So like I said, let's just focus on subtle retracements in continuation moves for now. You can look at full on reversals later. So step one, find a continuation sequence of candles within a particular day, as I've done here. Step two, identify the turning point or retracement by locating the exact candle that is the extreme of the turn. Then make a note of the date and time of that exact retracement candle on your footprint task sheet. Easy way to do this, I'm going to show you how. Click on Tools, Global Cursor On. Then right click anywhere on your chart and click on Chart Values Crosshair. You should now have a crosshair. Once you have identified the candle that turns, I've highlighted a few examples here, just pick one. Select the most extreme candle within the turn sequence with your crosshair like so. Do you see? This allows you to highlight the date and time of the turn below. So in this example, it was 4th of April 0800. Don't worry if your chosen candle is in the middle of the night. This is the New York time zone, and that is when Forex is very active. So you have written this down on your PDF. Next, I want you to locate that exact time and date on your footprint by simply just scrolling using the gray bar at the bottom. You can also use the scroll wheel on your mouse if you prefer. So locate the time and date you just wrote down on your PDF. So I'm just going to go and locate the 4th of April 0800. Just be rough with the time on the footprint. Doesn't have to be exact. Within the first hour is fine. So 0800 to 0900 in this case. Remember, these are 60-minute candles. So anywhere within the first hour is fine. Then just click on the footprint and do you see? It highlights the exact same date and time on my candlestick chart using the global crosshair. So I now know I'm definitely looking at the same spot on both charts. I know that that candle or turn there on my footprint chart is the exact same turn on my candlestick chart. Now I'm ready to do analysis like a bank or institution would. So what I want you to look for is trapped institutions or even retail traders. I've even given you a reference table on your PDF to make life easy for you. To be honest, you won't need it. It's actually very logical. So step one, decide your trade direction. Obviously here, we want to get short and play a continuation. Now think about it. Let's say we wanted to sell the market here. It's been going down, but we want to make sure we get the right turn or retracement. So think about it. If you want to sell the market, what is the most high probability trade you could take in terms of risk reward? It is the point where the retracement or pullback starts to turn back down. To identify where that turn or pullback may stop before it turns around using a candlestick chart is impossible. You may as well roll a dice. It could turn anywhere. Here, how do you know? Banks and institutions obviously don't want to do what retail traders are doing, literally rolling dice or guessing. What they do instead is actually very logical. To understand this, ask yourself the question, what is a retracement in this short move? Do you agree? It's just buyers coming in. So do you agree you need to study this buyer behavior causing this retracement? So it's probably helpful if you can see the behavior. How do you expect to do that here? Impossible. That is why we are using the footprint. So what sort of behavior are we looking for? Well, put yourself in a buyer's position here. Imagine you were a buyer here. When would you get out? Well, it's when you are trapped and the market starts moving against you, right? Obvious. The problem is, on this chart here, we don't know where our buyer's trapped. It is guesswork. However, using order flow, we now have the tools to tell us, because do you see, the bottom line is you actually only need to know two things. Number one, how many buyers are there? Because the more buyers there are getting trapped, the more violent the move the other way as they get out, which is exactly what you want because you are going the other way. And number two, where have these buyers got in exactly? Because that is where they are also likely to get out, or put another way, where the turn is going to happen. Well, from the last video, you know we have the perfect toolkit to identify both of those things. One, the number of trap buyers by using market orders delta. Can you see? We have buying, buying, buying. So heavy buying coming in, plenty of buyers potentially getting trapped. And number two, we have the third column here to tell us exactly where they have got in, around 130.45, maybe 130.50, and finally around 130.20 as well. Do you see? Those are their pain points. If the market starts to turn below there, they are going to get out of their long positions. Would you not do the same thing if you were a buyer? So do you see? What banks and institutions are doing is just using logical common sense analysis. They are identifying where other traders are in trouble and using that information to make a lot of money. The problem you've got is, how are you going to find these pain points using a candlestick chart? We've said it before many times. Retail traders are just gambling here. The good news is you are now thinking like a professional trader or a business. So write it down, those pain points on your sheet. Remember I said, this information is gold dust. You now know the critical pain points of the buyers causing the retracement. It allows you to get an entry because you know they will exit as we go below their pain point, around 130.45 in this instance. So you're no longer guessing. You know where the turn should happen. You also have risk management because above this area, you probably don't want to be in the trade anyway because the buyers are then back in control. Do you see? You now know all the sensitive spots on the chart. It allows you to control your risk reward like an elite trader at a bank. Now, don't worry too much about entry and exit. We'll talk about that in the last video of the 2-day accelerator. For now, take it step by step. Concentrate on the task at hand, which is to fill in your task sheet with the one or two major pain points. Then final step, I want you to observe the violent reaction the other way as the buyers causing this retracement become sellers and get out of their positions. Do you see how powerful this is? Because you are looking to get short. What is going to happen to your short position as these trap buyers exit? Your short position in these areas is going to get dragged down fast because of this violent reaction, putting you in a lot of profit very quickly. That is why banks are out there making millions, if not billions of dollars. They are doing elite analysis like this. But let's be honest, it's not particularly difficult. And yes, you know I'm going to say it because I know you can see it for yourself. If banks are doing this, then by default, they are clearly not doing any of the nonsense we see retail traders doing. Now, eventually, the goal is to, of course, get you making more money than you can dream of. And I think you can see we are slowly getting there. We are doing things the right way. However, I keep saying it, it is a process. You are on day 2 in a high-level bank grade program. You are in the best place you can be for your trading career, but be realistic. After 2 days in a bank, you are not going to be trading. That is going to come very soon. For now, just focus on identifying some of these pain points of your competitors. You can just imagine when you start getting good at this, it is going to put you on a different stratosphere, planet to your competitors. The execution, the buying and selling, the profits, all of that will come. But for now, do the task at hand, identifying these pain points. Observe the violent reaction as these trap traders get out, because that is what is going to drive your profits. Execution of trades we'll worry about soon. I am not naive, okay? Believe me, I know. You are here to make money and that will happen, but plenty of time for that afterwards. Identify these behaviors first So in the last column in your sheet, you could just write violent reaction observed as trapped, retail traders exited. So we are going to do one more example before I leave you to do this on your own. Let's use a different market, the S&P 500, which is my personal favorite market. You'll see why in a moment. So here we have the S&P 500, the US stock index. Remember to open this chart book, just click on File, Open Chart Book, and then select S&P 500 footprint. Just go through the short installation video earlier to get it set up like this. Then same process, step 1, find a sequence of continuation candles within a particular day, as I've done here. Step 2, identify the turning point by locating the exact candle that is the extreme of the turn or retracement. Then make a note of the date and time of that exact candle on your footprint task sheet. I showed you how to do that with the crosshair. So in this instance, it is 19th of March, 0300. Write this down on your PDF. Next, locate that exact time and date on your footprint by simply just scrolling using the gray bar at the bottom. Remember, just a rough time on the footprint within the first hour is fine. So in this instance, somewhere between 0300 and 0400, click on the footprint to make sure it highlights the same candle on the plain chart, which it does. So I now know I'm definitely looking at the same spot on both charts. So next, we want to look for trapped institutions or even retail traders. You have the reference table on your PDF to make life easy for you. But as I said before, you won't need it. It's all very logical. So step 1, decide your trade direction. Obviously here we want to get long and play a continuation. So we want to identify the trapped sellers causing the retracement. As soon as these trapped sellers get out, boom, the market is going to go up, pushing our long position with it. So if you remember, we can identify the number of trapped sellers by using market orders delta. Can you see we have selling, so much heavy selling coming in is perfect. Plenty of sellers potentially getting trapped. And finally, we have the third column here to tell us exactly where the sellers have got in, around 56.60 and maybe 56.63.5 as well. Do you see? Those are the sellers' pain points. If the market starts to turn above there, they are going to get out of their short positions. You would do the same if you were a seller, right? So write it down, those pain points on your sheet, then observe what happens as the market goes against those sellers, in particular, those pain points. Watch for a violent reaction as those sellers exit. That violent reaction is your profits. You should have a smile on your face when you see it, because whilst I'm an honest person, and the truth is, it could definitely be an institution trapped. Let's be honest, the likelihood is 99% of the time, the people trapped are going to be retail traders. You are now learning to be on the other side. That is why I say you can smile, as you are now the one taking advantage rather than the one being taken advantage of. Now do this for around 2 or 3 turns on GBP USD and 2 or 3 turns on another market, or you can do all of them on one market. I do like the S&P 500. You can see the order flow is just a lot cleaner. But anyway, have a go at this. Should be fairly straightforward now that you've seen my examples, and please don't take more than 30 to 60 minutes maximum. Remember, this exercise is not for you to buy and sell the market. We are almost at that point, but this is not it. This is to establish a baseline in overall understanding of how the market operates, the very essence of why the market moves up and down and has the reactions it does. That is going to put you miles ahead of any retail trader who, quite frankly, is using embarrassing stuff that has no place in a professional environment. So just find 4 or 5 turns in total across 1 or 2 markets, and then as soon as you're done, watch the most important video of the 2-day accelerator, the final one, where I am going to discuss how you are going to take your trading account from 0 to any number you want. 10, 20, 30, 40, $50,000 a month, or even more. I can't wait to see you there.